Hi there. In this video, we will have an overview of the new revenue recognition standard, that is IFRS 15, revenue from the contract with the customers. Let's understand the whole revenue recognition procedures from a transaction level. So first of all, let's acknowledge that this is a revenue recognition standard. So we are talking about revenue here rather than talking about any other income. It is revenue. So entire video runs on the recognition of revenue as per the new standards. And don't worry about the definitions. The definitions will be there in the standard itself. So it's there. If you want to read, just go through them. There's five-step model. We understand revenue from contract with customer is a five-step model. So we're gonna have a discussion on all the five steps and in a bird eye view, because I will be preparing videos that will separately deal with each of the complex areas. So it's just an overview of the to get an understanding on what exactly the standard talks about and how the roadmap and how the actually transaction is recognized in accordance with the revenue recognition standard. So the first thing is to identify whether the contract is with the customer or not. And definitely we have five criteria for that. The first step, if we talk about a transaction, we need to understand whether it's a contract with the customers or not. So we generally have five criteria for that. I'm not going to discuss in detail. I'm going to just run through them so that you can have an understanding. These are the areas we have to go through. So the first condition is the parties have approved the contract. It's an agreement. It's an offer plus acceptance, which becomes an agreement. Plus, it has to be enforceable by the law. And the second criteria is each party's right and obligations regarding to transfer of the goods and the payments is identified. The payment terms are identified. The contract has commercial substance. Commercial substance are a very detailed explanation is there in the standard. So we will go through commercial substance in separate. And it is probable that the entity will collect the consideration to which it is entitled to in exchange for the goods and services that will be transferred to the customer. So these are five criteria. If all the five criteria are satisfied, then we can say that it's a contract with the customer. So the first step is identify the contract with the customer. So then we will move to the second part of the five-step model, that is determination of the performance obligations. So this is the second part after qualifying whether it is a contract with the customer or not. So if it is not qualifying, then in such a case it has to be dealt in by para 15. We will discuss it in detail, but for now, if the transaction qualifies under IFRS 15 and to be accounted for as an IFRS 15, we will go forward and perform the other four procedures or the four steps. If it is not, then it has to be dealt by the para 15. Now, the second part is we determine the performance obligations. So performance obligations is nothing complex it is in its own per se, but performance obligations mean what the party has to perform as per the contract, what he has to do. For example, if it is sale of goods, I have to deliver the goods. If it is sale of service, I have to provide the service. The party have to do to recognize the revenue. So IFRS 15 drills down in detail and identify different performance obligations. So when we're going to read performance obligation, there's a detailed lecture on this. Then I can explain what in detail what's actually performance obligation is. So for an understanding, just have an intuition that performance obligation is nothing but what the party has to do to collect the money, what the party has to do to collect the amount that is promised in the contract. So the third thing we need to determine is to determine the transaction price. Now, what do you mean by transaction price? Transaction price means what the buyer or the service provider is going to collect by performing all the performance obligations. If you perform all the performance obligation, what you expect? This is a very heavy word, my friend. What you expect to collect from the buyer. What you expect to collect from the buyer, it's called the transaction price. And this is for first three steps we're going to discuss in this video. The first step is identify the contract with the customers. If it is the direct contract with the customers, we want to move on and when determine the performance obligations. It's basically what the what the seller has to do to collect the cash, or it's maybe deliver of goods or services. And the third thing is the determination of the transaction price. If the seller performs all the obligations that is mentioned in the contract, then how much amount he is expecting to collect from the buyer. For the next two other steps we're going to discuss in the second video. Thank you.